Bismillahirrahmanirrahim. The next usage of journal entry is depreciating assets. Depreciation simply means decrease in the value of fixed asset due to passage of time or usage of the asset. It means if the value of fixed asset decrease due to passage of time or usage, that's called depreciation. How we can manage it? There are different methods for depreciation, like a straight line method, like we can say declining method, double decline methods. We have Macker's methods, of course, the annuity methods, depreciation methods. Several other methods are there in the market, but mostly we use the declining method or straight line method, and as well as this one, the Macker's method. These are methods are common. Of course, how we can, I just said with the QuickBook, how we can use it in the QuickBook. At the end of the year, of course, we have to adjust the value of fixed asset, and some of the value should be considered as depreciation. How we can do it? We can do it with the journal. Go for the journal entry. But before to go for the journal entry, first of all, let us register our accounts. First of all, let us register our accounts with the QuickBook itself. For this purpose, first go for the chart of account. First of all, create some fixed assets. Although some fixed assets are there, but let us create the fixed asset, the new fixed asset. The first fixed asset that we want to create is the parent fixed asset. Which fixed asset? The parent fixed asset. And let us consider, or let us name this one as depreciable fixed asset, right? Depreciable fixed assets, and this is considered depreciable fixed asset 1. Depreciable fixed asset 1. Do not give any value for this one and let us save it. Why we want to do this one? Because for the rest of fixed asset, I want to select the sub account for rest of the fixed asset should be the sub account of the previous account, and all those fixed assets should comes under the depreciable fixed asset, right? So just wait for a few minutes, then you can understand. Now you can register your fixed asset. For example, one of the fixed assets that I have is by the name of land and we can say land and building. And this should be the sub account of what? It should be the sub account of this one, depreciable fixed asset 1. And give some value for this one. Let us say the value of land and building is equal to amount of 2 lakh. How much? 2 lakh. And how much was the value? On which date it was 2 lakh? On this date, for example. Then, okay. Then 7 new. Let us create a few more fixed assets. For example, we have vehicle, right? Vehicles, it should be the sub account of what? It should be the sub account of depreciable fixed asset 1. And how much is the value of this one? Let us say the value of this one is equal to, for example, 1 lakh, right? And this is on which date? For example, on this date. Okay, and of course, new. If you want to create several more fixed asset accounts, so you can create it. For example, let us create furniture and fixture. So record this one, furniture and fixture, for example. You want to record this one. And again, this also should be the sub account of what? It should be the sub account of this one, depreciable fixed asset 1. The value of this one should be, for example, 50,000, right? And of course, this is on which date? Let us specify some specific date. This one. Then, of course, save and close this one. Then when you come to the chart of account, you can see that all those fixed asset comes under depreciable fixed asset. What do you mean by depreciable fixed asset? It means the following fixed assets are for depreciation. It means they will be depreciated. So that is why all of them should come under one group, right? And let us create a depreciation asset as well. Go once again for the chart of account and create few more accounts for this one, for the depreciation as well. Click on this one. Like the fixed asset, create one fixed asset, one expenses account for the total depreciation. Mention total depreciation, right? If already there's a depreciation, mention total depreciation 1, for example. Total depreciation 1, just save this one, 7 new, right? Anyway, save it. Then, of course, you can mention the depreciation for each type of asset. For example, the first one, depreciation on land and building, for example. The first one was land and building, right? land and building. Depreciation on land and building, so completely we cannot record it. If we cannot record completely, let us mention, for example, L/B on this one. And this should be the sub account of what? This should be the sub account of this one itself. The total depreciation 1, right? This one. So then you can save and new. Save it. Then, of course, create one more depreciation, two more depreciation, depreciation on second asset. What was the second asset? Second asset was vehicles, right? On vehicles. It should be the sub account of what? It should be the sub account of that depreciation. Which depreciation? Depreciation, total depreciation 1. Save this one as well. Why the QuickBook gave a reminder? Because we have not assigned the class. And the last one mentioned depreciation, DEP, stand for depreciation, leave it. Depreciation on which one? On furniture, and fixture, right? So again, this one should be the sub account of what? This should be the sub account of depreciation on fixed assets. So you can save and close this one. Save and close. Now we want to charge depreciation on each of this one. We want to charge depreciation on, we can say, depreciation on furniture. We want to charge depreciation on each type of these assets. But first of all, let us check the balance of each type of asset that we have created. Depreciable fixed asset 1, furniture. How much is the value? 50,000. Land and building, how much is? It is 2 lakh, right? And vehicle, it is how much? 50,000. It is 1 lakh. Let us go for the company and create depreciation account, charge the depreciation for each type of these assets. You know that if we depreciate the assets, the expenses account, it means the depreciation account become debit, and the fixed asset, the account become credit. So let us depreciate the accounts. Which account we want to depreciate? So depreciate. First of all, let us depreciate, we can say, the furniture. So depreciation on furniture account will be debited. For example, how much we want to debit? We want to debit amount of 10,000. And furniture account become credited. Depreciation on furniture account become debit. It means depreciation on furniture account become debit, and furniture account itself become credited. How we can find out that one? So we can mention depreciable assets. Which account was the first one? Depreciable asset 1, right? And this is furniture. Mention amount 10,000. Second one, we want to charge depreciation for land and building, right? So depreciation, this one, total depreciation, yes. Once again, total depreciation 1. We want to charge depreciation on what? Depreciation on land and building. So depreciation on land and building, no, first of all, we made a mistake here. It's not here, it is total depreciation. It is what? Total, mention total depreciation, and that is depreciable on the asset. Mention total depreciation. Total depreciation, first one was depreciation on what? Depreciation on furniture to furniture account. Next one is depreciation on land and building. For example, how much is depreciation on land building? For example, depreciation on land and building is equal to 20,000. To account of land and building. How we can find out account of land and building? Account of land and building is here itself. The one which we want, land and building, right? And the next one, we want to charge depreciation on vehicle. So depreciation on vehicle to account of vehicle, right? Depreciation on vehicle, amount is how much? For example, amount is 30,000. To asset account of vehicle. How we can find out that one? Press D for depreciation to find out depreciation vehicle 1, right? This is the case. So now, see, depreciation on furniture to furniture account. Depreciation on land and building to land and building account. Depreciation on vehicle to vehicle account. So in this way, you can save this one. Even if there are several classes, you can specify the class as well, right? So save and close this one. No need for assigning the class. Now go in the chart of account and find the value of all this depreciation assets. Depreciable asset, furniture. Furniture previously was 50, now it is 40. Land and building previously was 2 lakh, now it is 1,80,000. Vehicle previously was 1 lakh, now it is equal to how much? 70,000. Then go for the expenses. Go for the expenses, find out depreciable Oh, find out the total depreciation one. Depreciation on furniture, how much? 10,000. On the next one, 20. On the next one is this much. And the same thing you can find out in the report. Go in the report, right? Then click on the financial, click on the financial profit and loss standard. Click on profit and loss standard. You can find out here. See, total depreciation one, right? 10,000, 20,000, this one. Total depreciation one is equal to how much? 30,000. Total depreciation one is equal to amount of 60,000. And the same effect can be found out in the balance sheet as well. Go once again for the financial. This time go for balance sheet standard. Or balance sheet standard, find out the group of fixed asset. So see, depreciable fixed asset 1, furniture, land and building, and vehicle. So value is 50, 40, it was 50. Click on this one, you can find out. It was 50, 10,000 is credited, now balance is how much? 40, right? Balance is 40. So close this one. So the same thing you can find out for rest of the assets. For example, for land and building, previously was 2 lakh, but 20,000 is credited. Now the value is equal to 1 lakh 80. And the same case for the next. So the total depreciable fixed asset value is now equal to how much? 50,000, right? And this is in this way you can manage the amount of depreciation. So it is adjusted in the balance sheet as well as it is adjusted in the income statement. So this was the purpose of calculating the depreciation. So this was depreciating assets or calculating depreciation in the QuickBooks.